Assalamualaikum. We are from group Dreamhigh and we will discuss about B.I.G Industries Berhad and Genting Malaysia Berhad.
I'll be explaining about the company background between large company and small company listed on the Bursa Malaysia. The small company that has been chosen is B.I.G Industries Berhad. It is categorized as small company as it has market capitalization less than 2 billion ringgit. Its market capitalization as at 30th June 2019 is RM 24.1 million. They has 3 divisions of business. The first one is the gas division, the second one is concrete division, and the third one is property development. On the first division, in which gas divisions, they process, distribute and market service, maintenance and trade-in related products in Peninsular Malaysia, Sabah and Sarawak. Under concrete divisions, they manufacture, distribute and market in Sabah the ready-mix concrete products and related services. Their vision and missions under property development is to be an innovative, resourceful and pioneering developer to produce what is required by the consumer. Next part is about the company background of large company listed on the Bursa Malaysia. The large company that has been chosen is Genting Malaysia Berhad. It has been founded in 1980s and it has market capitalization of more than 10 billion, in which their market capitalization is 19 billion ringgit as at the year end of 2019. They provide business such as leisure and entertainment activities worldwide. The company's own property in the United Kingdom, the United States, Bahamas, Egypt and also Malaysia. One of the famous properties owned by them is Genting, Resort World Genting, Resort World Bimini, Resort World Langkawi. And their service provided is theme parks, entertainment attractions, gaming, and retail outlets and other conference and international shows. Their vision and mission is to be the world's leading integrated resort operator, and their mission is to be dedicated to supplying the clients with the most delightful and enjoyable experiences.
I will be presenting the financial ratio for Genting Malaysia Berhad in 2019. First, I will present to you the profitability ratios of the company, which consists of return on equity, return on asset, operating profit margin and net profit margin. In 2019, it is measured as the stakeholders will be receiving around 8.511% from the profit generated by the company. The company is measured to have return on asset around 4.47%, which indicate that the asset used efficiently in generating the profit. Next, the operating profit is calculated to be at 17.02% and the net profit margin is around 14.31%. This indicates that the company generates more profit in the cost other than operating revenue. Next, I will continue with the liquidity ratio, which is an indication on the capability of the company to meet their numerous short-term debts and credit obligations. First, the current ratio, which is calculated to be at 1.7055, and the quick ratio is calculated at 1.6794. This indicates that the company are able to settle their current obligation by dissolving their asset. Other than that, the solvency ratio of the company, where how the company manage their debt, is measured. The debt ratio is measured at 45.46%, where almost half the asset of the company were financed by credit. The debt equity ratio is measured at 86.53%. Lastly, I will be presenting on the market ratios. The market ratio of the company will be presenting by their earning per share, which is at 0.2468 per share. Thank you.
I will be presenting on financial ratio of B.I.G Industries Berhad that we had computed for the year ended 2019. We started with profitability ratio. B.I.G Industries Berhad generate 3.56% on every 1 ringgit of total equity in 2019 and 1.8% on return on asset. Besides, the company obtained 4.68% of revenue after financing all variable costs of operation and 2.08% of revenue after deducting interest and tax. In overall, the profitability ratio of the company could be considered as low, although they had generated revenue, but it is in small percentage. Next, the current ratio of B.I.G Industries Berhad is 1.23, shows that the company is able to pay its short-term debt, as they have 1 ringgit and 23 cents available to pay for every 1 ringgit of current debt. However, the company may face slight difficulties in fulfilling their current obligation without the needs to sell their inventory, as they obtain 83 cents of quick ratio. For solvency ratio, the company acquired 49% of debt ratio and 97% of debt to equity ratio, shows that the company is highly leveraged and may be too risky to invest as they rely more on debt to finance their operation. Lastly, the company obtained RM1.99 on earning per share could be considered as high, and it reflects the value of the company, which is also high.
We are now going to evaluate the financial performance of the Big Industries Berhad and Genting Malaysia Berhad for the year 2019 based on all of the financial ratios that we had calculated. Firstly, we can see that Genting Malaysia Berhad had performed better than Big Industry Berhad as they are more capable in meeting any of their short-term debt and credit obligations. How can we see this? It is by looking at their liquidity ratios, which shows a higher percentage of the quick ratios and current ratios. As a result, it helps Genting Malaysia Berhad to increase confidence of the creditors to provide funds for the company. Moreover, the percentage of the profitability ratios for the Genting Malaysia Berhad are significantly higher than Big Industries Berhad. This is because the company is utilizing their capitals very well, and this also shows that they are efficient in generating profit. In our opinion, Big Industries Berhad may have difficulties in achieving a higher percentage of the profitability ratios as they are just a small company compared to the Genting Malaysia Berhad, which are a larger company. In addition, for the solvency ratios, it shows that Big Industries Berhad had higher possibilities to default as they are relying more on debt to finance their day-to-day operation. It can be seen that through the higher percentage that they have for the debt ratio and the equity ratio. On the other hand, Genting Malaysia Berhad are performing better in managing their debt in the operation as their percentage of solvency ratios are slightly lower. Last but not least, Genting Malaysia Berhad shows a lower percentage of earnings per share that is 0.2468 compared to 1.99 for Big Industries Berhad, which also represents the market value of a publicly held trading for the company. From this, the current investor or potential investor can evaluate their financial performance and their investment that they made are underpaid or overpaid in the current market. That's all from me. Thank you.
Malaysian Code on Corporate Governance is a tool for a company to have a good corporate governance. The structure of MCCG 2017 consists of 3 principles. The first principle is Principle A, Principle B, and Principle C. In this presentation, we will only focus on the first principle, which is Principle A, and it is related to the board leadership and the effectiveness. The first part of Principle A is about the board responsibility. In order to achieve the intended outcome 1, B.I.G Industries Berhad apply all practices required, while Genting Malaysia Berhad does not apply one of the practices, which is Practice 1.3. Practice 1.3 said that the position of chairman and CEO should not held by the same person. But Genting Malaysia Berhad depart this practice because the board believe in the leadership and the experiences of the current chairman. In future, the board need to review the interests of the shareholders on having the same person for both positions to avoid any misunderstanding. For intended outcome 2 and 3, both companies apply all the activities.
Second part of Principle A is board composition, which comprises of 2 intended outcomes, intended outcome 4 and also intended outcome 5. Intended outcome 4 require the board to make decision in the best interest of the company, taking into account diverse perspective and insights. Big Industries Berhad apply all the practices listed in this outcome except for 2 practices. Number 1, Practice 4.1, where at least half of the board comprises of independent director. Big depart from this practice. The board has 5 members, 2 independent non-executive directors, 2 non-independent non-executive directors, and 1 executive director. Thus, the company has 40% of independent directors in its board. The company action is the board and nomination committee must assess annually the independence of all directors. Next departure is from practice 4.5, where the board must disclose in its annual report the company's policies on gender diversity, its target, and measure to meet those targets. The board of B.I.G Industries Berhad only has one female executive director, which represents 20% of the board composition. So, the company will continuously sourcing suitable women candidates to be appointed in the board to further diversify the board composition. Okay, in comparison to Genting Malaysia Berhad, under this intended outcome 4, they depart from 3 practices. Number 1, practice 4.2, where the tenure of an independent director does not exceed a cumulative term limit of 9 years. Upon completion of the 9 years, an independent director may continue to serve on the board as a non-independent director. Genting Malaysia Berhad depart from this since their independent non-executive directors of the company will continue to be independent directors of the company, although has served for more than 9 years, because they are high-caliber individuals and well-known figures in their field of expertise and bring valuable insights and contributions to the board. Each of the independent non-executive director has to provide their annual confirmations of independence to the board and notify the board of any changes in their circumstances or any new interest or relationship that would affect their independence as an independent director of the company. Second departure is from practice 4.5, where the board must disclose in its annual report the company's policy on gender diversity. For large companies, the board must have at least 30% women directors. Genting Malaysia Berhad depart because their board currently comprises 9 male directors and 1 female director. They have considered to identify suitable qualified women candidate where they need to appoint a new director. Lastly, they did not follow practice 4.6, which required them to not solely rely on recommendation from existing board members, management or major shareholders in identifying candidates for appointment of directors. They should utilize independent sources to identify suitable qualified candidates. Genting Malaysia Berhad depart from this practice because they did not utilize the independent sources to search for suitable candidates. The reason is the management knows their operation in the specialized industry. Thus, they hunt for possible applicants with qualifications that match the standards of the guideline according to their networks. So Genting Malaysia Berhad future plan is apart from referral from directors, major shareholders and management, their board is open to utilizing independent sources to identify suitable qualified candidates when necessary.
In intended outcome 5.0, stakeholders are able to form an opinion on the overall effectiveness of the board and individual directors. As you can see here, both company B.I.G Industries Berhad and Genting Malaysia Berhad apply the practice 5.1. Next, we move on to the third part of principle A is remuneration, which comprises of 2 intended outcomes, which are intended outcome 6 and intended outcome 7. Intended outcome 6 talk about the level and composition of remuneration of directors and senior management, take into account the company's desire to attract and retain the right talent in the board and senior management to drive the company's long-term objective. Remuneration policies and decisions are made through a transparent and independent process. As we can see in this outcome, we can see that both companies apply the practices. Under practice 6.1, the remuneration of the directors should be reviewed by the RC on the basis of capability, performance in accordance with the remuneration procedures and policies, while Genting Company, the board and directors has implemented a remuneration scheme that focuses on executive directors and senior management in keeping with the corporate plan and long-term goals. It is not limited to the financial performance of the company and its subsidiaries. Next, the practice 6.2 mentioned that the RC of big company consists of 2 independent non-executive director and the executive director, while the Genting Remuneration Committee consists of 3 independent non-executive directors. Moreover, intended outcome 7.0, stakeholders are able to assess whether the remuneration of directors and senior management is commensurate with their individual's performance, taking into consideration the company's performance. As you can see here, big company apply all the practices in the 7.0, while the Genting Company did not apply under practice 7.2. where the board is of the view that to enable stakeholders to assess whether the remuneration of senior management commensurate with their individual performance as well as company's performance. The board disclosed on a name basis the top 5 senior management remuneration component, including salary, bonus, benefit in kind, and other involvement in band of 50,000 ringgit. So the future plan is the basis of decision has been continuously extended from previous year. On the basis of individual result, the company aggregate performance, inflation, and benchmarking to other firms working in related industry in the country.
To summarize, B Industry Berhad depart from 2 practices required in the Malaysian Code of Corporate Governance, while for Genting Malaysia Berhad, they depart from 5 practices. This shows that B Industry Berhad followed the Code of Corporate Governance better than the other company. It also indicates that the Big Industry Berhad has a good control on their corporate governance.